Hey everyone, and welcome back. Ready for another deep dive?
Always.
Awesome. Well, today we're taking a look at some recent activity in the global banking sector.
Should be interesting.
Yeah, we'll be hopping around quite a bit. A glimpse into Europe, the UK.
Oh, and even touch on Romania.
Right. Some pretty surprising trends, actually. Flood moratoriums in Spain, climate investments impacting UK banks.
And even a potential cash crunch in Sweden.
Who would have thought? Right.
Right.
Okay, well, let's jump right in. First up, the Eurozone. The European Central Bank, they've been cutting interest rates to try to, encourage businesses to borrow more, but it seems like it's not all good news for the banks themselves.
You're right. It's a bit of a mixed bag. I mean, the idea is that lower rates will stimulate the economy.
Yeah.
Businesses borrow more, they invest more.
Right.
But for banks, it can actually impact the profitability.
Wait, how does that work? I mean, isn't lending like their main thing?
It is, but it's all about the net interest margin.
Oh.
That's the difference between what they earn on loans and what they pay out on deposits. So when interest rates are lower, that margin shrinks.
I see, yeah.
It's like selling a product at a discount.
Okay.
You might sell more,
Right.
but you're making less profit on each sale.
Got it. Yeah, that makes sense. And, speaking of challenges for European banks, what about that news about the Italian government?
Oh, right.
They're trying to, raise billions of euros from the banking sector.
It's a pretty bold move.
It is.
The Italian government, they want to raise, let me see, $3.5 billion
Wow.
from banks and insurance companies to, cover budget gaps.
Yeah, it's definitely a bit concerning.
Yeah, it has caused some uncertainty in the market.
Right. Like, is Italy in trouble?
Well, it does suggest they're facing some financial difficulties.
Yeah.
It'll be interesting to see how this all plays out, though. The government's been trying to reassure investors
Yeah.
that everything's under control, but it's definitely a situation to keep an eye on.
For sure. Okay, well, let's move on to the UK now. They're dealing with a whole other set of challenges, particularly around climate change.
Oh, yeah. Climate change is a huge factor for banks everywhere.
Yeah, I was reading about a study from the Bank of England.
Right.
And, what really struck me is that over half of UK companies actually expect climate change to have a positive impact on their investments.
Interesting, isn't it?
Yeah, I mean, I was expecting them to be kind of,
Bracing for the worst?
Yeah, but it seems like they see opportunity.
It's all about green energy and energy efficiency upgrades.
Okay.
Companies are realizing that there's money to be made in going green,
Oh, I see.
both in terms of growth and cost savings.
Right. So it's kind of a win-win.
Yeah, they're seeing the opportunity and the challenge.
Okay, that's interesting. But there's a catch, right? Something
Right.
about big companies versus smaller ones.
Yes. The research actually showed a huge difference in how large and small companies are approaching climate investments.
Yeah, what was it again?
Big companies, they're investing way more.
Way more.
Yeah, compared to smaller businesses.
Why is that?
Well, probably resources, right? Larger companies just have more capital, more infrastructure, more in-house expertise
Makes sense.
to devote to these big projects.
Yeah.
Whereas smaller companies, they might struggle to get funding.
Uh-huh.
Or maybe they just need to prioritize other things.
Right. Day-to-day operations.
Exactly.
Yeah.
And it's not just about how much they're investing either. The study also found that companies are often using their own cash reserves
Oh, interesting.
to fund these green projects
Yeah.
rather than, going to banks for loans.
What do you think that means?
Well, it could suggest that banks aren't fully on board with financing climate action yet.
I see, yeah.
There could be several reasons for this. Maybe they see it as too risky,
Okay.
or maybe they just haven't fully caught up with the trend.
So even though businesses are ready, some banks are lagging behind.
Exactly. Speaking of lagging behind, let's talk about Sweden,
Sweden.
the poster child for a cashless society.
Right. Everyone always talks about how Sweden is like the most cashless country.
Well, it seems like they might be having some second thoughts.
Wait, really? What happened?
Businesses there are finding it hard to get their hands on actual cash.
Oh, wow.
And Sweden's central bank, the Riksbank,
Yeah.
they're starting to get worried.
So what's the problem? Did they go too far, too fast with, digital payments?
That's the big question, isn't it? That
Yeah.
shift to digital has been so rapid
Right.
that it's created some gaps in the system.
Like what?
Well, what happens if there's a power outage or a cyber attack?
Oh,
Suddenly you need cash and it's not there.
yeah, that's a good point.
So the Riksbank, they're basically saying, hey, banks, you need to make sure businesses can still get cash.
Wow, okay.
They're even talking about potential regulations if things don't improve.
It's like a reminder that we can't just completely abandon physical money, even with all the digital advancements.
Absolutely. And it's a lesson not just for Sweden, but for any country that's moving towards a digital-only financial system.
Totally. Okay, well, that's Sweden. Now let's switch gears completely and head to Spain.
Right, Spain.
Where they've been dealing with, well, a very different kind of challenge.
What's that?
Devastating floods.
Oh, right. The floods. It's just awful. So much damage.
Yeah, and over 200 lives lost. Just tragic. It makes you think about how important community support is during times like these.
It really does.
And it seems like Spanish banks are, trying to do their part, offering financial relief.
You're right. Many banks there are offering what's called a loan moratorium to those affected by the floods.
Loan moratorium? What's that exactly?
It basically means borrowers can temporarily stop making their loan payments.
Okay.
This includes things like mortgages.
So people whose homes were damaged.
Exactly, but also self-employed folks and small businesses.
I see.
It gives them a chance to get back on their feet, without the added burden of loan payments.
That makes sense, yeah. It must be a huge help for those trying to rebuild.
It is, and it shows that banks can be a real force for good in these situations.
Yeah, I agree. It reminds me of how Spanish banks offered mortgage relief during the COVID pandemic, too.
Right. It shows that they're willing to step up and help their customers in times of crisis.
That's good to see. Okay, so we've seen banks dealing with shrinking profits, government intervention, climate change, and now natural disasters.
It's a lot.
It is.
Sure.
But let's move on to a more positive story for a change. Let's talk about Poland. Their banking sector is actually doing really well.
Oh, yeah. They're definitely exceeding expectations.
What's their secret?
Well, one key indicator is their low level of what are called non-performing loans.
Non-performing loans? Can you remind me what those are again?
Sure. Basically, they're loans that aren't being repaid as agreed.
Oh, right.
So it could be, the borrower is having financial difficulties.
Okay.
Or maybe they've even defaulted on the loan. And a high level of these non-performing loans, it could be a bad sign for a banking system.
Makes sense. So Poland having a low level of these, that's a good thing.
It is. It suggests a healthy and stable banking sector, which Poland has.
And why is that? How did they manage to keep those numbers low?
Well, a few reasons. They implemented what are called credit holidays during tough economic times, which gave borrowers some breathing room.
Right, a chance to catch up.
Exactly. And they also have some good regulatory measures in place to encourage responsible lending.
That's smart.
Yeah, and Polish banks themselves have generally been quite cautious in their lending practices.
So smart policies, careful banks, and maybe a bit of luck.
Yeah, you could say that. But, even in a success story like Poland, there are always potential risks to keep an eye on.
Like what?
One thing that comes to mind is the issue of Swiss franc mortgages.
Oh, right. Those caused problems in some other countries, didn't they?
They did. When exchange rates fluctuate, they can really hurt borrowers.
Yeah, that's a tough situation. Anything else they should be watching out for?
Well, there's always the possibility of new regulatory measures, which could affect profitability.
Right. So never a dull moment in the banking world, huh?
Not at all. Okay, for our final stop on this whirlwind tour, let's jump over to the Czech Republic.
All right, Czech Republic, what's going on over there?
Well, their central bank just made a pretty interesting move. They doubled the reserve requirements for commercial banks.
Reserve requirements? What are those?
Okay, so reserve requirements, they dictate how much of a bank's deposits they need to keep on hand.
Got it.
Either in their own vaults or at the central bank.
Like a safety net.
Yeah, think of it like a rainy day fund for the banking system.
Okay.
By doubling this requirement, the Czech National Bank, they're trying to reduce the cost of implementing monetary policy.
I'm not sure I follow. How does that work?
Well, it helps to control the money supply and ultimately keep inflation in check.
Oh, okay.
Thanks for joining us on this exploration of climate investment and banking regulations. Remember to hit that subscribe button and stay tuned for more insightful content about the financial world. See you in the next video.